Okay, so for this video I wanted to cover the IRS Form 5173, which is a tax clearance certificate. So I get a lot of individuals reach out to me about this, and it's always because they discovered it in some unpleasant times, right? So I want to go over what is it, who needs to file it, and what are some planning strategies you can do to try to avoid this issue. So let's start at the top here. So if you're an executor of an estate, so you have a deceased family member or friend that you are managing the affairs of their estate, you might have been asked to provide a tax clearance certificate to a U.S. broker, right? And so that's the most common fact pattern I see this occurring. So why is that? Well, the United States imposes an estate tax, or it's effectively an inheritance tax, on U.S. tax residents. So if you're a U.S. citizen, a U.S. green card holder, or you're physically present in the U.S. long enough to meet that substantial presence test. And then it also imposes an estate tax on non-residents that have U.S. situs assets. So these are U.S. stocks, bonds, U.S. situs real estate. And so the reason why this is so important is because for U.S. residents, the estate tax exemption is relatively high. It's $12 million per person for the 2022 tax year. So what that means is that if you're a U.S. person, you're only paying the estate tax if your net estate exceeds that amount, okay, on the date of your death. If your net worth is below that, you're exempt from the estate tax, you don't have to pay it. Now for a non-resident, the exemption is only $60,000. It is incredibly low. Okay, I mean, look at the contrast. $12 million for a U.S. resident, $60,000 for a non-resident. So let's look at an example here. We have John, who's a citizen and tax resident of Germany, and he decides to open a U.S. brokerage account and invest in U.S. publicly traded stocks, right? This is very common. People not in the U.S. like to obviously invest in the U.S. markets because they traditionally do pretty well. Well, the value of John's account on the date of his death is $525,000. So now John's brother steps in, Adam, and he's going to act as the executor of his estate. And as part of that process, he contacts, everybody that John has assets with, because he wants to sell the assets and take the proceeds and distribute it to the beneficiaries of John's estate. Now, when he contacts the broker says, well, wait a minute. We have to put a hold on the account until you can provide a tax clearance certificate, so the 5173 from the IRS. So how do you get that? Well, Adam has to file a 706NA, that's an estate tax return for a non-resident alien, report the value of John's assets, and then pay the tax. So he reports the 525 minus the 60,000 exemption, which means 465,000 is subject to tax. Under the present rates, it's a marginal rate system. The estimated tax on that value is going to be about 33%. So you're looking at a $152,000 tax bill because John is a non-resident, has U.S. situs assets in excess of that exemption. Now, until this form is filed and until you get the certificate, the broker cannot give you the money. They have to legally withhold those funds under federal law. Now, what is a bit upsetting from my perspective is brokers are required to disclose this contingency in the account opening documents, and they do, but they're not very forthcoming about it when they're talking to non-residents, right? Because they want your business, so they disclose it in the fine print. But when you're having conversations with people in the U.S. about opening these accounts, they never talk about this with you. So unless you have a U.S. tax advisor that gives you a heads up here, or you do, some of your own due diligence and reading, you're just not going to know about this. Now, what are some planning ops to kind of avoid this? Well, the one thing I do with my clients all the time is we never open anything in their personal name. So if you're a non-resident, you should never, ever, ever hold anything in the U.S. in your personal name for this very issue. The estate tax can be a massive hit to your net worth when you pass away, which obviously you want to leave as much money as you can to your beneficiaries. And it's also just the headaches of it, right? Because this is in his personal name, Adam has got to get the documents to show he's an executor, go through this clearance certificate process. If, for example, we use a foreign corporate blocker, so a foreign corporation opened the account, that would help safeguard the estate tax issue, wouldn't have to file an estate tax return, and then also John could appoint Adam as a director of the foreign corporation, and so as a director, Adam can just go into the account and take the money if he wanted, right? He doesn't need to go through this estate tax process. So that's the long and the short of the clearance certificate. If you're watching this and you're an executor of an estate and you've been asked to provide this, this is the reason why. This is what you need. If you're watching this and you're still alive and you want to try to avoid this kind of problem, for your heirs or the executor of your estate, your spouse, let's say, you can do some planning now to try to get around this eventual little admin task that's going to have to be done, and obviously the massive estate tax bill too. So I hope that was helpful. If you have any questions, leave me a comment below and reach out to me as well, schedule a consult, and I look forward to seeing you again soon. Thank you.